What's up everyone, my name's Robbie, this is Robbie and Emil, and today we're talking about the best large cap momentum ETF. So when it comes to momentum investing and momentum ETFs, there are two kind of important things I want to discuss first. So basically, what is momentum? And so momentum can actually be defined in different ways by different people, by different fund companies. They might all have their own kind of definition of momentum, but in general, what I would say is that momentum is merely the price movement in a stock to the upside and having a lot of basically momentum to the upside. You could measure this different ways. So it could just be the past 3-month stock price change, the past 6-month price stock change. Some people will use the actual slope of how an uptrend of a stock basically. So there's different ways to do this. There's not only one way to do this. And there's another thing on the other side of this that's called factor investing. So when we're looking at different ways to invest, we can actually break it down into different factors, and ETFs, some ETFs will invest based on different factors. And so this is actually a little presentation from MSCI, which is a research company that also has different indexes that it's created. And so you'll see here that MSCI defines these different factors, and they've created something called a factor box. And so basically the different factors, there's volatility, there's yield, which is dividend yield, of course, there's quality, there's momentum. That's what we're talking about today, of course. There's also value. How do you define value? You can use book to price. You can use earnings yield. How about size? Mid cap, or the size of the company, mid, large. Today we're talking about two different factors. We're talking about large and we're talking about momentum. There's also growth. There's also liquidity. So these are different factors that we can define ETFs to potentially fall under. So hopefully you understand this. There are different factors when it comes to investing, and some ETFs utilize different factors to rank stocks, define which stocks are going to be inside of a portfolio, which stocks will have a higher weighting versus others, things like that. So I hope that makes sense. So what we're going to do now is we're going over some different ETFs. We're going to figure out which of these ETFs is the best momentum ETF to potentially invest in. Let's go ahead and let's get started. All right, so let's go ahead and get started with our different ETFs. So the first ETF we have is the iShares MSCI USA Momentum Factor ETF, which is MTUM. Next we have FDMO, which is the Fidelity Momentum Factor ETF. We then have VFMO, which is the Vanguard US Momentum Factor ETF shares. Then we have JMOM, JPMorgan US Momentum Factor ETF. I actually love the sticker symbol of this one, JMOM. Yeah, it's pretty cool. Then we have the Invesco S&P 500 Momentum ETF, SPMO. So if you watch my videos, you know the first thing we're looking at is the expense ratio of these ETFs. So first off, Momentum, or MTUM, is a net expense ratio of 0.15%. Next, we have FDMO with a higher 0.29%, VFMO with a 0.13%, JMOM with 0.12%, and SPMO with 0.13%. So first off, as you know from my videos, the first thing I do is I say FDMO has a higher ETF expense ratio. Is it justified? Are they really that much better than these other ones that it can justify having, double the, let's say, average expense ratio of these other ETFs? So we have to figure that out. That's one of the things we're going to discuss. Next thing we're going to go over are the yields of these ETFs. So you don't generally invest in momentum ETFs for yield, but it's good to know if you have some yield coming off of these, because we need to factor that in probably. So the distribution yield of MTUM is 0.60, FDMO 0.64, VFMO 0.88, JMOM 0.70, SPMO 0.56. So we got VFMO with the highest yield and the lowest yield being SPMO. These all pay quarterly, just so you know. So distributions are paid quarterly. In terms of fundamentals, which these are expensive or cheap in terms of earnings. So price to earnings of MTUM is 22.6, FDMO 21.2, VFMO 17.3, JMOM 22.3, SPMO 16.7. So SPMO being the cheapest in terms of earnings, MTUM being the most expensive in terms of earnings. Just good to know. Some people like to know these things. I like to see this for myself. Now, there is a really important part about momentum ETFs that I don't usually discuss when I talk about, for example, the different sector ETFs, when I talked about just so far like the large cap growth, large cap value. This is actually important for momentum because portfolio turnover is something that you should probably understand with these different ETFs. So portfolio turnover, for example, MTUM has 107% portfolio turnover. So every stock in the MTUM ETF is likely going to be traded within the year. With FDMO, more than that, which is 128%, and then VFMO is 103%. So what you'll likely see is that the fees, which there's higher fees for FDMO, it also has higher turnover. So probably higher fees that are being incurred by the fund because they are buying and selling stocks more often. Now, here's the deal with when it comes to momentum ETFs. A lot of momentum ETFs will buy and sell the different positions, let's say, every 6 months. They do this because they wait for different, let's say, waves of what's going on in the market. So if you wait 6 months and see what stocks are the highest momentum stocks, by the next 6 months, a whole new group of these stocks is probably going to be in that next group. And so every 6 months, there's probably going to be a whole new group of different stocks that are going to fall under the factors that they're looking for momentum. Now, this is actually important because of what's going on right now in the market, because you know that the market's down quite a bit recently, and momentum is going to end up probably turning over at some time soon where these ETFs start changing what they're defining as their stocks to go into the portfolio. So we can see here at the sector weightings of these different ETFs, MTUM, for example, has 25% of its portfolio in financials, but it still has 34.3% in information technology. Now compare this with SPMO, which only has 13% in information technology, has a similar 26% in financials, but this has communication services and consumer discretionary as much higher positions, as well as industrials. So what you'll see here is that when we look at the different ETF sectors and the weightings of the portfolio, I think that's going to be an important part about how we decide which of these ETFs we want to go with for now. More about that in a few, but what I want to do now is go over the top 10 holdings. So MTUM, Microsoft, FDMO, Apple, VFMO, Johnson Controls, JMOM, Apple, SPMO, Alphabet. Interestingly, look how big of a percentage Alphabet is in SPMO. It's 18% of the portfolio or more. It's got Alphabet as top 2 positions. There's 2 different share classes of Alphabet, which is Google. So very highly concentrated in Google, which is in the communication services industry, which you saw before. Communication services was a very high weighting in this ETF. Moving on to the market caps of these ETFs, we need to see how these are because we're talking about large cap today, and we should have at least the majority of these should be in large cap. So MTUM has the majority in large and giant cap companies. It does have some medium cap at 19%. FDMO has a little bit of medium cap, but actually a little bit of small as well. VFMO actually has quite a bit in medium and small and actually micro. So we'll likely be substituting this one out because it probably does have too much in these other mid, small, and micro. But I do have a sleeper ETF that we're going to show you in a few minutes. So wait for that one. We have JMOM that has some medium as well, and then we have SPMO that has less medium, mostly large and giant cap. So what I want to do now is I do want to introduce this other sleeper ETF that I'm talking about, and this is SPVM. So as you can see here, SPVM is the Invesco S&P 500 value with momentum ETF. So that's something to remember. So the word value here, this is a large cap value momentum ETF. The other ones were large growth. All of them were large growth. This is large value, bit different. This does have a high expense ratio, 0.39%. So that actually might be too high for you. So you're gonna have to decide on that one yourself. It does have a much higher yield than these other ones at 1.76%. And it's much cheaper in terms of price to earnings at 10.6%. Now the portfolio turnover is actually lower than all these other ones, so 83%. And in terms of sector weightings, we're not gonna get that very high technology sector weighting like we did in these other ones. Only 2.9% is in information technology. The others are like financials, very highly weighted in financials with some energy, which these other ones don't have, which I think is a really good sector to be investing in for this year. It also has consumer discretionary as a pretty decent sized position. So a very different ETF than these other ones that we've discussed. The other ones were kind of a lot more similar. This is very different. If we look at the top holding for this, it's Marathon Petroleum Corp. Then we have Prudential Financial, Mosaic Company, which is mining. So I just want to mention that I think personally this is a contender to be on your list because I think value going forward the next maybe couple of years at least might be a place that is going to be probably outperforming maybe growth. That's my theory, that's my thesis. And if you do agree with that, if you agree with me on that one, you might want to also think that this could be a potential best ETF for momentum right now. If you don't agree with that, then we're going to go with another ETF, one of these other ones we've discussed to be the best one. Let's take a look at all the rates of returns. So here's a chart of all the different ETFs I just discussed. I also include here the SPY, which is the S&P 500, so we can compare how these ETFs have done compared to the S&P 500. So this is what I wanted to kind of go over and make sure you understand. So first we're talking about going back to about 2018. This is around, 3-ish years. So if you went back to this time period, the best performing of these was SPMO with a 74.22% return, JMOM, then SPY, of course. So these two beat the S&P 500. FDMO and MTUM did not beat the S&P 500, and then SPVM way below here with a 37.50 return, definitely lagging. But as we probably know, past performance is not indicative of future returns, and we do need to kind of, in my opinion, make assessments of where we think we are inside, let's say, the market cycle. Are we in a cycle where growth is going to really outperform over the next few years? Or is value going to kind of finally show its head and start competing? And I think value is going to have at least a decent run for the next year or two. Maybe it won't completely outperform growth, but I think it's going to do fine. And so when we think about this, we got to go back and say, let's look instead of the 3-year, let's go to the 1 year. So which one has been the best for the 1 year? Well, to me, I think it's actually pretty self-explanatory why SPVM is the best performing out of these. It's got 23.95% over the past year, where all these other haven't done so great. SPY was at 14.50%. SPMO did also beat the S&P 500, but SPVM really outperformed. And this is kind of what I'm talking about. I think value is going to have a better performance going forward the next few years. I could be wrong. That's what I think. So for me, I believe that SPVM is going to be probably the best momentum ETF right now to invest in. However, I do think SPMO could come in second. So here we're going back to December of 2016, and I wanted to do this so you could see a bit further back, but the problem is that JMOM the inception date was in 2017. So don't worry about JMOM. Disregard that one. So in this, we still have SPMO outperforming and doing the best out of these, with MTUM coming in second. Then, S&P 500, FDMO, and then JMOM, don't worry about it. SPVM, of course, lagging. So like I said, I do like SPMO as the runner-up to SPVM. Let's take a quick look to summarize what we saw before in these two ETFs. So first, we have the expenses. So SPMO has a nice lower expense ratio with 0.13%. SPVM has a much higher expense ratio with 0.39%. That right off the bat may make you want to avoid SPVM. So if you're very fee conscious, this probably is not going to be for you. I would go with SPMO instead. The distribution yield, if you do care about that, SPVM does have a 1.76% yield, SPMO 0.88. So anyway, I'm going to go with SPVM. We're going to take a look at the charts of that. Let's see what the technicals are looking like. So SPVM, going back to March of 2020, the low base for a lot of these stocks after the market fell a lot. So large uptrend channel for SPVM going up until about September of 2021, which is interesting that at that point in time, SPVM broke down through its uptrend channel, which a lot of growth stocks did not happen to have that happen until around December of this year. So this is value, it happened earlier. Let's zoom in a bit and see what's going on. So first, I do see a bit of an uptrend line right here. this green line, I see some support areas here in the 50.40, some resistance here in 55. This looks like a double top here, so that's not necessarily a great thing, but we do have a bounce right here. We'll see what happens if this can get back up into this resistance area. Now, what are the indicators telling us if this does happen? As we can see, RSI is on its way up. MACD, the oscillator, is starting to have smaller bars, which could be a good bullish indicator, which means that this MACD line is going to come up closer to this signal line and might cross it. These will turn green. Stock price could continue upwards. But in general, I'm not seeing anything that's saying, for example, RSI isn't telling me that this is an oversold stock. It's just can basically sitting inside like the 40 area, which is generally neutral. It's just that it is going up. So that at least is a good thing. So what would I do here? Basically, I wouldn't do anything. I would say, okay, does this thing come up into this area? Does it test it? Does it get rejected? After it gets rejected, does it decline? And if it declines, does it make its way down here? And is there next a bounce here? So if there was a bounce, good place to buy potentially in the 50 area. So that's what I would do. I would see if this thing comes back down, hits around the 50 area or around this uptrend line. Once that happens, watch for the bounce. Could buy it at that point in time. If you cared about timing entry, of course, if you don't care about timing entries, buying this for the long-term dollar cost averaging into it over the next few years, could be a good thing to do, in my opinion. So thanks everyone so much for watching. That's all I got for this video. If you liked it, hit that like button, subscribe, see future content like this, and watch another one of my videos coming up on the end screen right now.